Hey guys, Kill here. Welcome back to another midweek video. Today I'm going to share with you a really short video on some technical analysis of something that is on my radar. I also want to introduce you to a new video concept called the midweek markup. Now, I can't make any promises of how long this video series is going to last, but while I have some free time, I want to pop in the middle of the week, or at least trading wise, middle of the week, Tuesday afternoons, and share with you either a new setup that is on my radar or follow up on one of the setups that we talked about in the weekend video. So I think it'll be pretty cool, short, sweet, straight to the point, and hopefully it will bring you value. Now, one thing before we get started, unlike my weekend video, there will be no email that comes out saying that, hey, the weekend video is out. This one's gonna be uploaded straight to YouTube, so make sure you're subscribed, make sure that notification bell is hit, that way you don't miss it. Also, if you hit me up on social media beforehand and you have an idea or a pair or an index or a market or a stock or whatever it is that you want to take a look at, let me know, shoot me a DM, and I'll add it to the potential watch list, and maybe it'll make the cut for this video. All right, let's hop into it. All right, so let's get started. We're looking here at the Dow Jones on the 4-hour chart. I'm going to go ahead and erase some of these notes. These are from the workshop we did last week, Red Zone Resilience. With thank you, by the way, for showing up. Awesome event. And we had two things that we were looking up here. One was a potential advanced pattern formation that has just completed. Another was a potential continuation trade. So I want to follow up on both. We'll start with the first one, which is going to be the advanced pattern formation. I'll draw this out really quick. But this is a pattern which comes after a series of Fibonacci retracements and extensions are hit in a very specific order. There's a handful of them. This particular one is going to be called the Gartley. And it starts with what we call an impulse leg, which is our first swing low to swing high. So if I take my little triangle tool here, and we look at this direct move from our swing high to swing low, this is going to be our X to A. This is what sets the pattern off, the starting point, the first thing we identify. We're then looking for a retracement. This one comes past the 618 Fibonacci retracement, which means it's going to be the Gartley pattern. So the depth of that retracement really depends or determines what type of pattern formation we're looking at. This is going to be called the B leg. This next move down is going to be the C leg. And then our move up is going to be the C to D leg, and this is where we're looking for our completion right here at the 127 Fibonacci extension, and the zone of completion lasts from this level all the way up to the starting point of the pattern. So this is called a bearish Gartley pattern. You can see price action hit the 127, reacted, stopped right on the dime, and where we would be looking for a little bit of a pullback. So that's trading opportunity number one, and I guess it's really not an opportunity anymore, but a follow-up on something that we discussed last week. Trading opportunity number two, if you look at this from a different perspective, is going to be a trend continuation trade. And we saw this in the NASDAQ, I believe. Yeah, something similar to NASDAQ right here, where you can see that we had this previous level of structure right here. I call this a structure swap. Peter Brandt calls this an ice zone, where we have support is broken, resistance, and then once we break that level, right, once resistance is broken, we expect it to act as support again. We pull back, we extend. Same thing here on the Dow, right? But we still have room to go. We still have meat on the bone. So we have this previous level of resistance, right? Our B leg of our Gartley pattern. Resistance hit, beautiful symmetrical double top right here. We saw a reaction off of that. We came back up, hit it again, resistance held, boom, saw a nice reaction off of that as well. And then most recently, we broke it. And you can see previous structure resistance immediately turned to support. We broke it. We had a brief retracement right here of this inside bar, this red candle right here, and then a breakout to the upside, followed by another retracement, right? This was the first strike entry. Another retracement, beautiful 3-bar reversal as we spoke about in the workshop, and then an extension up. Now, there is still meat on the bone, and what I mean when I say that is that there's still room for for markets to move, right? My expectation is that we're going to retest our previous structure high, so a zone that goes really anywhere between these two blue lines. We can look at 35 just to make it an even number. And you can see currently price action is retracing once again, right? We've kind of done this ebb and flow thing. We've actually, looks like we put in a nice AB equals CD pattern here. Let me just measure this out. No surprise that we reacted there. Look at that. Yep. Basically a nice one-to-one move, and now we're seeing a little bit of relief. This relief is a pullback. So the opportunity at hand is to take advantage of this pullback, look for a buying opportunity as long as we stay above these lows right here and have a chance to ride this thing to the next extension, which should be up in that zone. And again, that could be an AB equals CD pattern in its own right. We can take out a Fibonacci extension from the swing low to the swing high. Boom, you can see 127 Fibonacci confluence at the bottom of the zone, 1618 Fibonacci confluence at the top of the zone. Awesome opportunity. It is a busy week in the markets. It is first week of the month, so we have non-farms coming out. We have an FOMC meeting in, I believe, 2 weeks, and this is the last week that our FOMC members will be speaking. So if there's going to be any finagling of the market, using their words to influence the market, I guess you can say, it's going to be done this week. So keep an eye on the markets. We could see a lot of movement, but this is something that's on my radar. It's been on my radar, and it's still on my radar. If you guys like what you saw, make sure you subscribe to the channel. Also, if you want to do this live with me or my partner, Jason Greystone, 3 times a week, make sure you sign up for that 14-day trial over at tier1trading.com. Hop in the live room. We have a London live room. We have a New York live room. The New York live room is recorded each and every day. So even if you can't make it live, you can catch the recording, but you get about 4 to 6 hours of live analysis, live trading, Monday's Q&A, Tuesday, Wednesdays, and Thursdays each week. Take advantage of that 2 weeks and use it to better yourself as a trader. All right, see you guys on the weekend.